This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
Hi, this is Joe Rabil. So what I want to do today is talk about a specific trade setup, and I want to show you the 3 keys to getting and identifying and executing a very good trade setup. All right. Now this is for a pullback trade. The breakout trade is a little bit different. It does have 3 of its own keys, but I will stick with this pullback trade in Uber. I think it's a really good example and something that the subscribers to my research were able to take advantage of. Let's get into this now. Before I do, just so you know, a lot of these techniques are in my book. You can start out there, rabilstockresearch.com/book. Also, if you do enjoy this content, please hit that like button and also subscribe. Okay, so I've got my grid up of Uber with a monthly chart in the bottom left, weekly in the bottom right, daily upper right, hourly upper left. All right. Now, I know that some of my subscribers took advantage of this because I got some emails on it and some commentary in our community. So what I wanted to point out here is we're looking at 3 different keys. All right. There's the initial thrust off of a move or a breakout play or a continuation signal. Then there's the pullback, okay? And then there's the trigger. Those are the 3 keys we got to be on the lookout for, and they have to kind of meet certain criteria. The hardest part of trading, in my opinion, is the pullback. Okay, every pullback is a little bit different. Every pullback has a little bit more different level of strength to it. And that means we have to identify what is the best course of action for a trigger. All right. Now, we can find a lot of stocks that do this. This is the monthly chart. Look at the strength behind this move. You see this up leg started at the 18-month in the middle of 2023, made this thrust to the upside, very strong confirmation in MACD. Powerful, powerful confirmation in the ADX with green DI on top, breaking out, showing the buyers are very strong, causing this ADX to rise, well above the 25-30 level. All right. Then we go through our correction phase. Now or a pullback phase or correction, whatever you want to call it. Now, on a monthly chart, it's a pullback. On the weekly chart, it's an ABC correction. We need to be able to identify the strength of this portion too. The problem is, so we can identify this on the up move, and we want to look at it on the higher time. We want to identify the strength on the higher time frame on the up move, the up thrust. Okay. But on the pullback, because these indicators, MACD and ADX, have lag to them, all right? They're not going to be as quick to identify weakness or strengthen the sellers on a pullback. We have to go to the smaller time frame to identify this. All right. So we look at the strength of the up move based on the higher time frame. So if this is a 2 time frame trade, this is the higher time frame. This is the lower time frame, 2 time frames. All right. Now we can go down to the micro in this. I'd call it micro because this is higher, lower, and then this would be the next lower time frame. So you could call it next lower, right? And if you're doing a trade off a weekly, daily, then the next higher would be the upper time frame would be the monthly. But let's just keep this simple. We're doing a monthly, weekly, and then we can use the daily to refine our entry. Now, what I know is I got a few guys that did the monthly, weekly version of this trade, and I think there were some that did the weekly, daily combination. All right. Now, I'm going to focus mostly on the monthly, weekly because I just want you to understand the combination of events that need to take place and how disciplined you need to be and how much patience you have to have. We have an up move with strength, and then we go to the pullback. Now, during the pullback, we need to identify how much strength is in this correction. Now, the way we go about doing that, and I'm going to expand this so you can see. First thing we want to do is watch the strength of the sellers. So when we're declining, that is the red DI. The red DI is telling you the strength of the sellers. The first thing you want to be on the lookout for is, does the red cross above 25? All right, this gray line going across here is the 25 line. Now, if you notice, we went through a big decline. It went from $82 dropped down to what, 60, low 60s, mid 60s, rallied up, and then came back down to the mid 50s. So we're talking about a move from, low 80s down to mid 50s. And red DI, the strength of the sellers could not even get above 25. This was the peak in the red DI during this decline. This is pretty violent negative DI. This is all negative DI, this big drop. This doesn't count, but the rest of these would be negative DI, and you couldn't get this to cross above 25. So that's the first order of business that I do, is I look and see how strong are the sellers. Because if this breaks out and does this, then I want to watch and see if the ADX follows suit and crosses back above the 25 line. If that happens, then I know I need to be a lot more patient with this entry. I don't need to be in a big rush. All right. But in this case, it did not happen. We had the ABC decline. We came down and red DI could not do that. And we had a low ADX condition where it was below 25, and the red DI was below 25 as well, failed at 25. All right. Now, the second order of business, so what that tells me, so what I know right now is that the buyers are clearly still in command. We've gone from 82 to 55, so we've had a big drop, yet the bias is still positive based on what I'm seeing in this lower time frame ADX signal. Okay, this is huge information. All right, you're getting a massive advantage over everyone else. Everyone else is looking at this, especially through this decline here, and saying, God, this is breaking down. It looks like it's actually rolling over. Looks like it just broke the trend line, rolled over, turned down, right? But we know that the higher time frame's in an uptrend, so we're thinking the other way. But more importantly, we know that the sellers aren't as strong as you think they are. Now, the other thing we want to figure out is the velocity of the decline. All right. That means how steep these moves are. Not necessarily. We know that the sellers have been the stronger of the two during the decline, but we don't know how severe the slope of the move and the strength of the move has been. That's where the MACD comes in. So the MACD only made it back to the zero line. All right, here's the zero line. And we went through, again, a pretty severe corrective pattern. And all we did was work off the overbought condition. We were way overbought up here. And then we came back down to the zero line. Now, if this line crosses below and the red line, the signal line crosses below, then we know we need to be a little bit more patient. Now, that's a little different than the red taking over, because in this situation, we have enough strength in the buyers that we know the bias is to the upside. Okay, so this is more about timing. This is the MACD is giving us help with the timing. This is telling us whether we want to do it or not. Because if red takes over and shows strength, then it's almost like we probably want to put this on hold for a while until we see green come back again. And most of the time when you see red take over, causing the ADX to move up, it takes a long time to get things back up and going again. And it might not really ever trigger when that happens. But when it plays out this way, where we don't have any strength in the sellers and the MACD just comes back down to the zero line, we need to be ready to go on the first sign of a trigger. All right, so let's just review real quick before we go to the trigger. So we have the strength on the upside confirmed by MACD and ADX on the higher time frame. All right, and then we have the ABC correction confirmed by the lack of strength in the sellers on the decline phase. Strength on the up phase, lack of strength in the sellers on the down phase. So we have the two components that are incredibly important to identifying a setup situation. We have a setup. All right. Now, if anyone who wants to know a lot more detail on the trigger side, because this came down to the zero line and held, and we have an ABC correction, we can draw a trend line in. Now, these rules are it's not that simple. We need to know the rules, and that's where the course comes in. I go into detail in the first course. The Advanced Trend and Momentum course goes into detail on all that. All right, so we have this trend line. So you have the option to take that. Now, one of the things that we talked about in the video and in our live webinar and that kind of thing was how important this 85 level was. So coming up through 85 could have easily been your trigger. Your trend line would have also been worth considering, even though it had already made a pretty big move. I don't really like that as much. So usually I'm waiting for a higher low to form or a pullback or something like that. Nonetheless, we had one trigger could have been taking the trend line break. I mean, it is a signal. It's definitely a signal. Now, because it was up so much, I might not have taken that. I might have waited for that higher low to form. That could have been your second option, second trigger. Third potential trigger would have been coming up through 85. And then actually your fourth. And as I said, we had some guys that took advantage of the higher low. That's where the RSI comes into play. As a additional trigger using the daily after a kind of like a breakout play on the weekly. So we have all three components. We have the option to play it off the weekly chart. We have the option to play it off the daily chart. And then it's just a matter of from here, most guys have already taken a partial profit. All right, we've got the gap up. We got a partial profit in place. And what I've been telling my subscribers to do in the volatility that we've had is to go ahead and put it at a break even. Depending on what your entry was, you go to a break even and sit back and see if the market allows this to turn into a big winner. That is all we're looking for. We don't know. There's no way of knowing which of these stocks are going to turn into big winners. That's why I suggest being very disciplined about your exit strategy and not trying to be a hero and saying, hey, I'm getting out because I think this is the end of the road or the market's going to turn down or anything like that. You just don't know. It's possible. Trust me, I spent 3, 4, 5 years studying exits and tried to be the perfect exit guy. And what I found was we're a lot better off being disciplined and consistent with our exit strategy, and it really helps our equity line look a lot more consistent. This is what I want your equity line to look like, right? We don't want it to go like this and then this. We don't want the big jagged moves. So in order to do that, you take partial profits, you raise your stop, and you have an exit strategy that's consistent and disciplined. All right. So hopefully this helps. Let me know if you have any questions. Thanks.